I think most innovation happens somewhat slowly or gradually to be adopted by wide populations.
The worst case scenario, someone who's working in the US to try to send money back home gets destroyed on fees trying to send their family money.
I think it was like 2014, 2015, when we still had like Time or Newsweek, like print editions. It was like the first feature about Bitcoin. And there was a picture that they created, a graphic of a Bitcoin. And I think that did so much damage because for years, people were like, but where are the Bitcoins? They love the fact that we're just owning the word blockchain. I did not realize that was going to be the audience that was most excited about the change, but they are. I think the digital gold idea is one that maybe got a little ahead of itself in the sense that it was a way to simply explain what Bitcoin is to people who are unfamiliar with crypto.
What is up, everyone? Welcome back to another Beluga live stream. I am your 21-year-old crypto degen host, Alpha, king of the trenches. Today, we are talking with Lane Kasselman, the co-CEO of Blockchain, formerly blockchain.com. Lane is an absolute crypto Chad with a super interesting background. Prior to working in crypto, he was actually a fundamental part of Uber and worked in politics. For those who don't know us, we are Beluga. Beluga is the nerd wallet for crypto. We stay in the trenches 24/7, so you do not have to. We have a newsletter that goes out 3 times a week. It's completely free, and it's the best information in crypto. To subscribe, go to heybeluga.com. We also have articles on our website with everything that's going on in the crypto space. Make sure you check them out. And finally, we host these podcasts with the most interesting people in crypto, like Lane. So without further ado, Lane, how's it going? What got you into crypto?
Well, I've never been called a Chad before, so I'm quite honored. I thought it was too.
There's a first time for everything.
First time. Sorry. So, what got me into crypto? Was that that's the question? So this is not to praise him for any reason. This is like the honest truth. But Peter Smith, the founder of blockchain.com, got me into crypto. I was early at Uber, as you mentioned. And after I left, I was kind of bouncing around trying to figure out what to do. And a friend of a friend was like, hey, you should go meet with this guy in New York and talk about Bitcoin. And Peter reminds me of this all the time. I sat down with him, told him all about the company. This is like 11 years ago. And I said to him, I don't believe in your fake internet money thing, man, but you seem like a nice guy, so I'd be happy to help you. And that started my journey. So I wasn't original in crypto like he was, but I came to it soon after.
What was the landscape of crypto like back then?
You talk about degen today. It really was like edge tech pros or tech bros who generally had an engineering background, had read the white paper, and just sort of got bit by something that's better than the current system, right? So like the idea that there was a better way to have borderless transactions and to have self-custody of assets, I think really grabbed a certain subset and sort of like the tech ecosystem. The rest just sort of ignored it and was focusing on back then like ride sharing and home sharing and that type of thing. It was still pretty niche.
So one of the pivotal points of the early days in crypto was this whole debate of should Bitcoin be peer-to-peer cash or a store of value? Where do you stand on that personally, and what has blockchain stance been on that over the years?
Yeah, that's it's funny. We've just we met a little bit before the podcast started recording, but you hit the crux of why I'm in the space and why I sort of get up every morning and keep working on it. And it's really around that store of value idea, and really is what keeps me motivated. Look, people in North America and the US, we have a great financial system. We have the privilege of living in one of the most prosperous countries and nations in the history of the world. But that's not true everywhere in the world. And in fact, having a safe store of value in most parts of the world is a fantasy because you have to deal with hyperinflation, or you have to deal with an unsafe banking environment or whatever. But there isn't a place to store your assets. And how can you ever hope to sort of build wealth or save up for your family or do that thing or do those things that we sort of take for granted if you can't have a safe store of value other than like putting fiat under your mattress? And so, for me, I think that our ability to solve that problem, and blockchain's doing it every day in emerging markets all over the world, is super compelling. So, like, while I appreciate the sort of YOLO Ferrari crowd who's making a lot of money off trading, the price fluctuations in the alts, like, cool, good for them. I'm here for the emerging markets that are really trying to make their lives better and are using crypto as a way to get there.
You guys have done a lot of stuff in third world countries around crypto. How is the adoption cycle different for less developed countries than, say, the US?
Yeah. I think one of the things that's so amazing about emerging markets is that they generally don't care what's happening in the macro or in the US economy. We saw this most acutely in the back half of 2022 and into 2023, sort of the last crash, right when we had Terra Luna and we had FTX, and we had basically tons of crypto companies go under. Emerging markets didn't care, right? Like, they were still using USDT or other less expensive assets to use for things like paying the babysitter or buying a pizza or like going to the grocery store. For them, it's a replacement for TradFi, and is just sort of what they use on a day-to-day basis for transactions. And we were super surprised when we saw it in our data, right? We were kind of looking under the hood to see how retail was reacting to the market struggles. And we were like, well, what is going on in Nigeria, right? Like, why are we seeing so much activity in Nigeria? And we finally got under the hood of what was happening. And that was a big wake-up moment for the company to start really investing in emerging markets, because you know what? Consumers, they find a way, right? They find a way to optimize their ability to execute transactions in a seamless and inexpensive way.
So do you think of it more as a profitable endeavor or a philanthropic one?
Absolutely profitable. Like, we are a for-profit company. Hopefully some of our investors are listening. I confirm that we are a for-profit entity and we are profitable. And just because we're, doing something that's good for the world doesn't mean that we don't have to make money on it, right? So emerging markets are extremely revenue positive places for us to operate, and one we're leaning into for the foreseeable future. That's not to say that markets like the U.S. and Western Europe, where like we have a significant presence as well, aren't also really great markets for revenue and for the business. But it just means that so many companies ignore big swaths of the population, big parts of the world, entire continents. We don't. We take them seriously.
I read an article probably a year and a half ago about how countries that fail to adopt the last wave of technology adopt the next wave of technology faster out of necessity. So for instance, in India, they'd never got credit card processing at large scale. They just didn't have the infrastructure. It was really quite challenging to go and take an Amex and spend it at places in India. That being said, Google Pay to this day is most successful in India, and they adopted it faster than anywhere else, to the point where in the US, Google Pay is kind of like Apple Pay's like demented cousin. Whereas in India, it's like, that's what you use. Do you feel like that trend plays on the blockchain, or do you think that the learning curve of crypto makes it harder for adoption to happen in these emerging markets?
Super astute question. I think, it's the Jurassic Park quote, like, nature always finds a way. And so to me, and especially with consumers all over the world, they're always going after, safe, reliable, cheap, and quick, right? So like, those dynamics when it comes to financial transactions are the same sort of everywhere. And I think that, right now, crypto adoption varies, country to country. I think the latest stat I've seen in the US for some exposure to crypto is up towards 20%, which is still a pretty small percentage of the population. And I think in, wealthier nations, it's pretty similar. Whereas like, the penetration's deeper in crypto or in emerging markets where crypto is legal. I think that all changes, to your point about, catching up with sort of the next wave of technology as we get deeper into AI-based transactions. I mean, we're on, and definitely don't want to spend this podcast talking about AI because there's way too many of those, but it can't be ignored as it relates to crypto, because right now our interaction with most AI is very one dimensional, right? It's like, I need you to do X, and it spits out Y, right, or spits out X. Like, it just executes a query for us, or a task. But what it's not doing is executing a transaction, right? So that's multi-step. It's I have this favorite pair of Nike Air Force Ones. There's a guy selling them in Buenos Aires. I want to buy them from him. So, whatever your favorite AI is, mine happens to be June, which is blockchain's AI agent. I asked June to go find me these Nike Air Force Ones that I love, and then execute the transaction. Can't do that yet. No AIs are doing that yet. But when we're able to do that, which I think is probably this year, your agent will go out and say to the agent for the seller, like, all right, I'm going to figure out the fastest way, the cheapest way to transfer value from me to you, right? From my person to you. And that's always going to be crypto, right? And because I don't have Argentinian pesos, and he probably wants dollars, it's pretty hard for me to send dollars that way. So I'm going to put my USD into June. June's going to convert it into a digital asset that, I probably didn't even think was the right one to use for transferring to Argentina. And it'll spit back out Argentinian pesos on the other side. What's so interesting about that is it will automatically be opting in consumers all over the world to crypto without even realizing it. I joke that it's sort of like, V-Bucks in Fortnite, right? We're basically like opting people in to a digital ecosystem without even realizing it. And the same thing is going to happen pretty soon for all of us.
There's so much I'd like to unpack there, but to clarify what you were talking about, basically what you're disrupting is the scammy Forex exchanges in an airport, where some unsuspecting in a nice way, the unsuspecting tourist goes and loses 10 to 20% of their value by swapping. And in like the worst case scenario, someone who's working in the US to try to send money back home gets destroyed on fees trying to send their family money.
Yeah, I mean, I don't know how the disruption happens in airports, but I know the rule: never change your money at the airport. But I do think, like, the Western Unions of the world for remittances, or wire transfers, especially international wire transfers, they're like $24 or something. They're so expensive. Like, that gets disrupted. It doesn't make sense anymore. It hasn't made sense for a while. It's also a pain, right? I don't know if the last time you tried to send money outside the US via wire. It's a huge pain. It doesn't need to be.
Yeah, I completely agree. I see a world where you sort of have 3 lanes based on your like level of technological savviness and comfortability, right? You have that. There's always going to be a market for TradFi, I think, because your grandma is just not ever going to be savvy enough to know with certainty that she's not getting scammed when she sends someone Bitcoin, right? So like, it's so much better for her to be able to use it. Possibly, use a bank, call someone up. If they send it to the wrong person, you can get it stopped, right? And then you have like the middle ground, which is like stablecoin payments. Like, I know I'm sending you money. Why would I wait 3 days for that? Why would I pay a middleman? Why can't I just send you USDC or USDT? Like instant transfer. Let's get rid of all the fees. And then I think the third level of that is, in my opinion, I think it's privacy finance, where people pay a premium in order to have a private transaction. Because if I send someone money and I don't want say I'm a company and I am paying for a research report from some research firm that I don't want my competition to know about, I don't want them to just be able to trace my transaction back to me and be like, oh, well, we're going to get a research report from them too. That totally takes away from the alpha of it.
Yeah, I think that's right. I tend not to, lean too heavily into absolutes, right? I think most innovation happens somewhat slowly or gradually to be adopted by wide populations. And I think, the financial system in the US, for example, is great. Like, my credit card always works as long as I pay the bill, right? And it's pretty easy to use. And most retailers are set up to accept a credit card. I do think we start chipping away at that a little bit, right? It already started to happen with the phone, as my mother-in-law says, tap, tap, right? So like, she doesn't go anywhere with her credit card anymore. She just has her phone, which is a total pain at restaurants that, she has to go up and go into the kitchen to, scan her phone on the register. But like, we're getting there, right? So we're chipping away at what the legacy interactions were. And I do think there's space for crypto to edge in there. But I don't think, at least in the US, we fully replace TradFi, I think we work alongside it, right? We will be used in the most efficient way possible. And I think just most consumers will end up having wallets without even realizing it because of AI transactions.
I've always thought that the litmus test for crypto is if someone can use it without knowing that they're using crypto. Because it's a little like years ago they did the Coke versus Pepsi thing, where Coke has in the US mind, Coke is the dominant soda. But then when they go and they just don't tell people if it's Coke or Pepsi, most people pick Pepsi, right? So if you tell someone, hey, this is a crypto product, they're going to have this adverse reaction and not really give it a fair chance. Whereas if you just let them use it and be like, hey, this is cool technology, and at the afterwards be like, hey, by the way, that was crypto, I think you get a better result.
Yeah, I mean, I don't blame the early innovators in crypto for it. But when we were talking about distributed ledgers and multi-sig and like just new terms that made sense to maybe people in finance, but not to the regular folks, like we didn't do ourselves any benefit to obfuscating what the underlying fundamental value proposition was. We've worked really hard at the company to explain things simply so that our customers who are new to the space feel comfortable that they understand what's happening. At the same time, we also have advanced trading features for our customers that are more sophisticated. But I think it took a while for the entire crypto industry to realize that it's okay that there's a little bit of magic happening under the hood. We don't have to explain it every time we have an opportunity to, because that just loses folks.
Right. It reminds me a little bit of there's a book, and it talks about like the 5 different types of people, and they kind of like attribute each type of color. And there's some people who want to know like everything about everything, right? Like they want you to, if you do something for them, they want it like line item by line item explained. How does it work? And then there's the other people who just like care much less about the minutia and care more about like the big results of like, I want to get money from A to B, and I don't really care how you do it. And if you tell me too much about it, it's just going to stress me out. So here's my money, and now make sure it gets over there, right? And I think crypto was really good about finding the about appealing to the techie, slightly autistic crowd of people who love every little detail and want to know how the sausage is made. And now we're getting to a point where we're trying to help the rest of the people who may not care that crypto is on a decentralized network of computers.
Yeah, that's absolutely right. My approach to getting deep in the space was to sort of either experience or play with every new hot topic in crypto for a long time. And so, I was deep into, yield farming. I was really deep into the sushi swap. I bought a bunch of miners and was mining at home. But like, even I got bored with that stuff, right? So it wasn't like it kept my attention for longer than a few months. Like I wanted to experience it so I could talk about it intelligently and I could know what others meant when they were talking about it. But it's not like I was super into it. If I wouldn't have been super into it if I wasn't working at a crypto company, right? So I think most folks are probably in a similar boat, which is like, if they have a reason to learn about it, they will. But otherwise, they just want the benefit of the value proposition, and that's enough.
I've historically always onboarded my girlfriends into crypto.
Yeah,
I was
always. Does that go well?
You know what? I tell them that the whole reason we're like in a cool place going to a crypto conference is because I was able to trade successfully. Yeah. So normally that gets them on board a little faster. But it's certainly a struggle because initially they're always like, "That's a scam. I'm not interested." But yeah, I've tried giving them books. I've given them like audiobooks to listen to, but eventually, I've always been successful. I've eventually been able to like get them to buy $100 worth of Bitcoin or something, and then they probably never use it again.
I think it was 2014, 2015, when we still had like Time or Newsweek, like print editions. There was it was like the first feature about Bitcoin, and there was a picture that they had created, a graphic of a Bitcoin. And I think that did so much damage because for years people were like, but where are the Bitcoins? Like, let me see the Bitcoins, because there was like a gold Bitcoin on the cover. It was like Newsweek or Time. And like everybody saw the Bitcoin. So clearly they must exist. because it was on the cover.
Right. Well, and what the other thing that certainly didn't help that is there were physical Bitcoins
Right.
for
Yeah.
right. Like people were just selling it, like they just make them and sell like a big thing that held 100 Bitcoin or 1,000 Bitcoin, and now that's like a collector's item and it's super cool. Or what Richard Mill did, the watch with a crypto wallet in it.
Yeah, I love those things. Like, yeah, I've got a couple of those random items that just have like a wallet built into them. I don't use any of them. I just think it's fun that people did that. I don't have the Richard Mill, by the way, but yeah, others.
No, it's super. It's super. There, one thing about crypto is we do have a bunch of random merchandise that just gets like every era of crypto has the random merchandise that becomes a collector's item. One of my friends has an original FTX risk management hoodie.
That's amazing.
Yeah.
The in 2023, I guess, May 24, maybe it was 2024 at the Bitcoin conference in Vegas. Because they've got F1 there. There's an F1 store in I don't remember which hotel it is. Oh no, it's the hotel that's across from it's in the Resorts World. There's like an F1 store, and I was walking through there, and in the sales section they had all the whatever the Mercedes racing team was that had like the FTX logo on the side of that, and they were like 80% off. I bought a bunch of them, because I'm like, well, these are fantastic. Nobody else here is going to buy these, but I'm going to buy them. They'll be fun to give to people.
Awesome.
Yeah.
Well, I remember I read there was a book about the founding of Twitter, and it was written by I believe Nick Bilton, and Nick also wrote the book on the Silk Road, which is, in my opinion, anyone who's in crypto today should read about the history of the Silk Road just to understand what the original crypto landscape was like. Yeah. Because for better or for worse, Ross onboarded more people into Bitcoin than probably any other person.
Yeah, I've read it. It's fantastic. I just love narrative nonfiction anyway, and I agree. Like, I think that's it was interesting. I was fortunate to go to the crypto ball right before the inauguration when President Trump got inaugurated. And what was interesting there was that so many of the attendees, there were like people like me, execs at whatever crypto companies, but then a lot of the other attendees were those OGs, right, who probably got onboarded during the Silk Road era, and had invested their life savings of $10,000 or whatever it was, but really believed, right, and held on, and now are extremely wealthy and contributed to campaigns and whatever else. But there were just a ton of those people there. One of our co-founders, Nick Carey, was there with me, and Nick is also an OG. He and Peter founded the company, and walking around with him was like walking around with one of the biggest celebrities in the room, because so many of these guys were from a decade ago, right, and had been on forums together and random meetups together and kind of staying under the radar together. And it was really the first time they'd all been in one place in quite a long time.
That's awesome. I love crypto conferences just based on the fact that when I'm not doing these podcasts and not in class, I'm basically in crypto group chats, like trenching, just buying degenerate meme coins. But the only time I see these people, right, we're all like sitting behind like pudgy penguin profile pictures. The only time I see these people is the few times a year that we all decide to go meet up at a crypto conference, and it's always super fun.
What's your favorite one?
My favorite one, Real Vision is actually super cool because it's much more intimate, in the sense like Bitcoin conference. I mean, you're running around with the OG, so I bet you guys get to go everywhere. But like, just generally, like, I can't walk up and talk to the guy who is on the main stage, right? But with Real Vision, all the speakers are super accessible. They walk off stage, you just go talk to them. So I was talking to Farouk from Rug Radio and the president of Coin Fund, and Wrecked Mando. Like those guys are all super nice, and it's really cool just being able to like hear them speak for an hour and then just go up and ask them questions about what they said. What's your favorite?
It changes over time, right? I go to quite a few, although not as many these days as I used to. I just went to the Cayman crypto conference a couple weeks ago on Grand Cayman, and what I loved about it is, I'm a policy guy at heart, and it was quite the nerdy regulatory crowd. So much so that I was, doing a panel discussion about VASP licenses, which is like a very mundane crypto regulatory topic. And if I'd been doing that at any other crypto conference, there'd be like 8 people in the room. This one was packed. There were like 200 people in the room. It was fantastic. The people were super engaged, asking really interesting questions, and like that was just kind of fun for me personally, because there's not that many sort of crypto policy experts. There are certainly more today than there were 10 years ago, but there's still not that many of them, and they were kind of all in one place, so that was pretty fun. So I like that. I don't know. Otherwise, like I do find the Bitcoin conference in Vegas to be fun, just because it's like so much flash and excitement and like big events, and everybody rolls through. It's like, it's a place that, celebrities and elected officials and CEOs of, non-crypto companies, everybody wants to be seen there and roll through. I don't know. I like that. I like that the industry gets that sort of recognition. So I think that's fun.
Yeah, Vegas is cool. And then I remember when I was in Nashville before,
Oh,
and that
yeah.
was cool too. Nashville is a good city.
And Miami,
Um,
right? Before that. Yeah. Yeah.
yeah, Miami's fun. Miami will always be the crypto hub. Um, Even though if we're talking regulatory wise, it seems like Wyoming is actually the most robust from a regulatory perspective in the U.S. these days.
Yeah, Wyoming is pretty progressive. We actually have the contract with the state to be their brokerage for crypto, which is a huge win for us. Got that a year and a half ago. Yeah, Wyoming's been pretty progressive. I think you're seeing a lot more states follow as well. Generally the state landscape is pretty healthy. I think the most challenging markets are, New York. Just to get a license to operate in New York is still quite a challenge, and so small companies don't really have the ability to do that. And then this year, California has a similar law that comes in force. So I think those markets will be continue to be challenging for smaller companies to compete in. Larger companies, it's fine, but and then the rest of the states generally are either hands off or their regs are pretty progressive.
There's an initial ethos in crypto of like cypherpunks and libertarians, right? We had this guy on the show a few times now, David Johnston, who got in 2012, and he was talking about how on the original Bitcoin, I think Bitcoin.org forum, they did a poll in 2012 or 2014 of political affiliation, and 40% of the forum were anarchists. And today in America, probably less than 0.01% of the population genuinely believes in anarchism. What do
I
you
don't think
say
that's
to
an official party, as far as I know.
right? Uh, what do you say to those original cypherpunks who sort of reject all regulation in crypto and feel like the beauty of it is that it's the Wild West?
Yeah, I mean, look, if you think about why regulation exists, it's generally to protect people, right? It protects the people that voted for the elected officials that created the regulation. We call it consumer protection these days. That's why like a lot of regulation exists, or maybe consumer protection, however you want to interpret it, right? Whether it's safety, whether it's fairness, and I appreciate the sentiment that some things should exist in a lawless environment. But I think that is probably short-sighted. Most new industries emerge challenging the incumbent industry or the status quo. And that's certainly what we've done in the crypto sector. The second part of that challenge is then getting acceptance. And acceptance, at least in the United States and certainly the EU and the UK, is a permanent regulatory framework. And if you want to have both, then you need to make yourself responsible for upholding the regulations that are meant to protect the people that are using your product or participating in industry. So like I get it. Like I get that it's fun to not have any rules. And look, I was early at Uber and like we just ignored the rules, right? Like we saw rules as something that should be broken. Like laws were things that needed to be changed. And the policy was ask for forgiveness. And it was us against the world, and we won. But we couldn't do that forever, right? So eventually we had to partner with regulators to create laws to keep people safe and to ensure fairness in the industry. And so, yeah, I get it. Like I appreciate the sentiment. I just think that like, things can't truly grow and become global and have widespread adoption absent regulation. That's just kind of the world we're in.
What do you think about what a lot of those initial, I don't know, you see it like Balaji is a big advocate for it, or Brian Armstrong is a big backer of Prospera, where they're pushing for like zones with minimal regulation just to experiment in blockchain, rather than, traditionally if you wanted to do that, you had to go to the Caymans or Dubai.
I love the sandbox program. That's kind of what we're talking about. And I think that, I mean, it's again, like I don't want to generalize and using broad strokes to sort of talk about regulators around the world is inappropriate because it's just not accurate. It's not how it works. But progressive regulators, whether they're on the right or the left, regardless of what country you're in, generally believe in the idea of a sandbox. They may not call it that, but an environment in which founders and innovators can try out their product or idea in an environment free of regulatory scrutiny. I think that's a great call, and it's not new though for crypto. Like that idea has existed for a long time in a lot of countries and certainly a lot of states in the U.S. As a way for startups to grow and flourish. I think that idea really sort of became popular like in the 80s. So it's been around for a while. We're just sort of calling it a different thing now. So I think it's a great idea. And I think, I don't know him well, but like I am familiar with, a lot of what Brian Armstrong talks about publicly and where he chooses to invest and where Coinbase chooses to invest. We're good partners of that company and like them a lot. And I do think that he also appreciates, like we do, that if you're not investing in crypto startups today, right, or just crypto ideas today, then you don't have new innovations tomorrow. And at this point, our companies need those innovations for the entire industry to keep growing. And so it's incumbent upon us to ensure that those startups, those ideas, have a place to actually experiment. And so that's what we should be doing. And in fact, if there's a CEO of a crypto company that doesn't do that, I doubt their company will be around very long.
So I wanted to take a step back and talk a little bit about what's going on with blockchain generally, because you guys have made some changes. For instance, you've redesigned the website, you've changed from blockchain.com to just blockchain. Can you talk about that? Like why do that?
Glad you asked. Hopefully some of your viewers are in LA because our marketing is probably in their face right now because we are all over LA right now. Can't miss it. It's all red everywhere, every digital sign. So the company started as blockchain.info, which makes a ton of sense because the first product was a blockchain explorer and it was started by a bunch of engineers and it was an information site. So why not call it blockchain.info? That made a lot of sense. They also happened to buy blockchain.com. This is some like legend stuff. I don't really know the full story, but supposedly the company, then was operating for a while and nobody on sort of the marketing side knew that we owned blockchain.com until a new CMO came in. And this is 2018, I think, 2017, 2018. I was involved in the company, but I wasn't in-house. I was an investor and an advisor. I was like, wait, we own this domain? Well, like we should differentiate ourselves from the sort of, capital B blockchain technology and like lowercase b blockchain, the company, and decided to make sure that we had the ability to really own the SEO around the name. So made the change to blockchain.com so that we could really just boost our SEO. That worked incredibly well. So in the intervening years, we don't just own blockchain.com SEO. Because of that, we also own the SEO for blockchain, just the word. And so now we have a new CMO who figured this out over the last year, that we actually don't need the .com anymore. And in fact, having the name blockchain plus .com is a lot to fit on a billboard. And so he's like, why don't we just drop the .com? Like, we don't need it. It actually won't hurt our SEO. And it's about time we own it. What I didn't realize by doing that was that we've had investors all over the place who are like, that is the best idea ever. They love the fact that we're just owning the word blockchain. I did not realize that was going to be the audience that was most excited about the change, but they are. So now, that said, I like to talk about it in terms of we both love basketball. There's home games and away games. So like there's blockchain.com and there's blockchain. We're sort of using both, right? There's like the home name and the away name. It just kind of depends on the environment. But like the marketing that you'll start seeing that's just using blockchain is really to help our brand recognition as we're growing our presence in North America.
So I pulled up one of your guys' ads. What does "you'll never work in this town again" mean? What does that mean to you guys?
Yeah. So what you're pointing out. So I think probably some of your viewers get what's going on there, and the other half are like, what's the deal? So in LA, all of the quotes are like a little cheeky and maybe like slightly offensive. It kind of depends on which one you're looking at, just to get people talking about it. So "you'll never work in this town again." I'm probably not doing this definition justice, but it's a thing that supposedly was said in Hollywood if you cross like a Hollywood studio exec, right? So you're an actor, you turn down a role, and the producer or the director is super mad at you. They'll say like, "You'll never work in this town again," right? Like it's a thing from the movies. Like it's a cliche about how Hollywood works, and so that is only in LA. And if you're an actor or actress in LA, you likely know what that means. There's a bunch of others that are similar to that. I think there's one, I wrote one that's like, it's something about like we'll help you through your second divorce, right? So like stuff like that. So like they're all a little cheeky, but they don't have anything to do with like the company itself. It's just, the value of crypto.
When I used to go out on the town with this family friend who's a little older than me, he'd always say, "I'm looking for my third ex-wife."
That's right. And like the idea behind all of these is that like crypto helps you with whatever the sentence is. So like, "You'll never work in this town again." Well, the idea is we're sort of picking up on this idea in Hollywood that like, you'll never work in this town again if you cross a studio exec. But what we're saying is you'll do so well generating wealth in crypto through blockchain.com that you'll never work in this town again because you don't need to, right? So generally all of these statements kind of lead to that point of it's back to one of our brand slogans: invest like your icon, right? So like, how do you invest so that you can build wealth like somebody you look up to?
Going back to, you were talking about Grand Cayman. I heard that you guys are doing stuff in the Cayman Islands. What's going on with that?
So our parent company, or our top co, is a Cayman company. We were fortunate to get our license to operate in Cayman back in 2021, one of the first crypto companies to do so. For those that aren't familiar with what's happening in Cayman, there's a lot of crypto companies based there or that have operations there. And the reason is that Cayman has been a financial hub for a very long time. So TradFi figured out long ago that for various tax reasons, it made sense to put headquarters there, or at least have operations there. And so a cottage industry kind of grew up around it. So now you've got accounting firms and law firms and sort of other financial services firms, all that are based there or that have operations there. So it was natural for the Cayman regulator to be one of the first to create a framework for crypto companies to operate legally in the territory. And so when we did, we got the ability to operate our institutional business and some retail products through Cayman. So, blockchain is so large today. We operate in over 100 countries that we have regulatory entities all over the world. And it gets a little bit complex on sort of which product and which customer base goes through which market. But Cayman services quite a large population of our institutional clients. And they have really leaned into crypto. So, this crypto conference, there were very few non-residents traveling in for it. It was mostly locals. I was one of the few that flew in for it.
Can you speak to your institutional business a little more? I know most people know you guys for your robust crypto wallets, but what's going on the institutional side? And from a broader perspective with the crypto markets, what are you noticing from your institutional investors?
Blockchain, our institutional business is the easiest way to think about it is like a prime brokerage. So we service hedge funds, VCs, high net worth individuals, crypto native funds, and we offer spot OTC, derivatives, custody, lending, margin, options, structured products, kind of everything you would normally see at a prime brokerage. And we run trading desks between our offices in Singapore and London. And also we've got some new staff starting shortly here in Dallas. So we've got 24/7 coverage around the world. And those clients, those institutions can be anywhere from the Middle East to New York to Hong Kong and Singapore to Brazil to London. They're all over the world, and represents quite a significant portion of our business. So while we're known as a retail company with our more than 40 million verified wallets, our institutional business is also quite large and continues to grow rapidly. I think what's so interesting about the institutional business is that most crypto is sort of interpreted through the lens of consumers, except consumers actually have not been very active in crypto over the past couple of months. In fact, this quarter has been very quiet from a consumer perspective for everybody in crypto. And the place that it's not been quiet is the institutional space. So, when we saw, the price of the majors drop over the past couple of weeks at various points, the dynamic was retail users get a little freaked out, they start to sell. But institutional users see it as the majors being on sale and start to buy. And I think that's really what's reflected today. We're not seeing institutions as interested in alt activity. So that's been a little bit more muted, but the majors are continuing to see a lot of institutional interest. And so I think, the future, major movements in crypto will be largely driven by institutions as they've, woken up to this being an extremely exciting asset class. The next area that we think is probably growing for crypto institutional are family offices. So, the US has the highest concentration of family offices in the world. And those family offices are very crypto curious. And so we think quite a few of them are going to be interested in asset management related products. And so we're meeting them where they are and providing access to those products in the future.
So previously we touched on Bitcoin being a store of value. And that's where, you've said that you see the value proposition of Bitcoin. The question that's been in my mind for the past several months, I first heard it when I was in Miami at actually at the Real Vision conference. If Bitcoin is digital gold and we tokenize gold and stick it on a blockchain, what's the point of Bitcoin?
That's very meta. Yeah, sure. I get it, but it's a fair question and seems like a great discussion in a lecture hall in university. But I think that just ignores the fact that there are multiple assets, right? So it's not like Bitcoin's the only asset. So I think that question is the answer is much more obvious if there is only one digital asset, right? If there's only Bitcoin, then yes, of course, then gold just sort of supplants it. But in a world where there are kind of an unlimited number of assets, then that just becomes one more. So I think the digital gold idea is one that maybe got a little ahead of itself in the sense that it was a way to simply explain what Bitcoin is to people who are unfamiliar with crypto, right? And it's not meant that Bitcoin is the replacement for it, right? Those are two very different investment assets.
Yeah, and we've talked about this a little bit on the podcast in previous episodes. Bitcoin is more like digital gold as an analogy than in practice. And if you talk to a precious metals trader, right, they'll pull up the the 100-year chart or the 1,000-year chart, right? Like it has so much more history, whereas we're still a really young industry. So, and I do think like being in college, everyone assumes that people my generation are like crypto obsessed, right? Everyone's like, oh, all the 20 somethings are using blockchains and they don't use Venmo. They send each other Bitcoin. I'm here to say, unfortunately, that's not the case. But I do think over like my hot take is that over the next maybe 10 or 20 years, the debate used to be, do you buy stocks or do you buy a house? Right? Like historically, the S&P typically beats owning a home from an investment perspective, unless you're in like a really high end community or you happen to pick a community that's become hot, right? Like if you bought in Austin 20 years ago, you did great. If you bought in some random place in Arkansas, probably not so hot. I think Gen Z is going to have a similar debate of, do I own a house or do I buy Bitcoin? What do you think about that?
We can't live in Bitcoin. And, as somebody who's a little older than you and has bought and sold a bunch of homes, I can tell you that not every one of those purchases, actually none of those, one of those purchases was for investment purposes, right? So I think the idea that buying a home is an investment tool that will grow at a higher rate than like the S&P or anything else is a very like new idea, right? That actually wasn't the case for most of kind of modern history. And yeah, owning a home comes with other benefits. And I don't think every decision in life has to be financially optimized or investment strategy optimized. I think doing that is probably a pretty boring life. And so that said, I think the bigger issue is like dollar debasement. It's like, okay, to be clear, buying a house is a good idea. And if you can, you should, right? Like that's a good call because it leads to a lot more things than just like, increase in value. And I do just firmly believe as far as home ownership goes, you should buy something that, you can add value to because then the value will increase whether or not the market itself is increasing in value. But that said, dollar debasement is a real thing. So like, I don't think that, if you do really well in crypto and you want to cash out, they should just leave it in like dollars. I think that's a terrible idea. I think you should be in a high growth asset for sure. And I think crypto, specifically Bitcoin and ETH are two of them that are really smart investment strategies for that. I don't think they should be your only investment strategies, but I think they should be much more than just, a small percentage of your portfolio. I'm obviously pretty biased and I carry a lot of my personal investments in crypto. But I'm maybe unique in that regard. But I think as you correctly surmised, your generation and those after you will likely feel more comfortable investing a lot of their assets into crypto, and I think that's a good idea. If for no other reason than the dollar is weakening and it becomes less valuable over time, and so if you want to sort of maintain that buying power, you're going to need to put it somewhere else.
We had a guy on the podcast a few weeks ago named Cameron. He runs a company called Burner, and they basically built like a intro crypto wallet that you're basically supposed to they're like crypto gift cards. You give them to your friend, you let them experiment with crypto, and then when they get it, you're like, okay, now go pick up a real wallet, like a blockchain wallet, right? Like it's not designed to have longevity; it's designed to onboard people quickly. But their second product is the Burner terminal. And it's basically like a payments processing terminal for stablecoins. And he was telling me, kind of going back to this idea of a store of value, initially in the early Bitcoin days, people in third world countries wanted to get into Bitcoin because they felt like it was a better store of value than the fiat currency that was provided to them by their government, and they didn't trust their banks. But now with the popularization of stablecoins, a lot of people in the third world are like, I just want access to dollars, and I couldn't get that. And they were sleeping in with them under their mattress, and now they're realizing that they can just get them as stable coins. So do you think that stable coins are a bridge to crypto adoption, or do you think they're more of a use case for expanding dollar domination around the world?
Can it be both? right?
It could be.
I think it's
Certainly.
both, right? So I think that it's important not to confuse store of value, like safe store of value, and investment asset, right? Like those are actually different things, although something can serve both purposes. But I cannot put myself in the shoes of somebody that's in an emerging market. I can only sort of understand academically what it is that they are dealing with as far as an unsafe banking environment or a hyperinflationary financial environment, right? Like I'm not living it every day. Like I live in the U.S., so like I don't have that as a struggle. But I would imagine if I did live one of those markets, I'm more concerned about a safe store of value than I am about an asset that's going to grow in value, right? And so stablecoins make a ton of sense for them to be what they're adopting. That wasn't really an option 5 years ago, right? So they were going to other assets first. It makes sense that that's what they're shifting towards now because they actually don't have the downside risk. So that makes a ton of sense. I do think that though, as more consumers get into the space, not just consumers, as just more institutions and consumers get into the space, we'll see adoption on both sides for different reasons, and that's okay, right? That's crypto is supposed to be flexible in its utility.
I love it. So, what do you want? What do you want people to remember? Where can they find your products, and what should they know about blockchain going forward?
Well, super easy to find us, blockchain.com. So I guarantee you will not forget that. And that website will give you access to the Blockchain Explorer, which still exists today, which is the number one source of information about transactions on all of the various blockchains, as well as access to our educational area that will teach you about every one of the assets and more assets that you didn't even want to know about, as well as access to all of our various products on the institutional side and on the retail side. And of course, links to download the apps. The apps are pretty awesome. I'll put them up against anybody else in crypto. It's really important just to remember that we are one of the oldest companies in crypto. We've never broken a trade. We've never failed to meet, we've never failed any of our customers in meeting their transaction execution needs. And we've got record uptime compared to everybody else in the industry. We are the trustworthy ones. We've been around for a long time, and maybe that gives us a little bit of gray hair, but that also means that we are one of the most reliable. So if you're looking for a partner, or you're just looking to add to your crypto partners, we definitely want to be one of them.
Well, thank you so much for your time. To the viewers, if you may have come in late, and if you don't know us, we are Beluga. Beluga is the nerd wallet for crypto. We stay in the trenches 24/7, so you don't have to. We have a newsletter that comes out 3 times a week. It's completely free. It's great information. We think it's the best writing in crypto. You can check it out at heybeluga.com. You can also check out our articles there. We have some articles about blockchain, along with everything else going on in crypto. And then finally, we have this podcast where I interview the most interesting people in crypto. So please make sure that you like, comment, retweet, share. As an added bonus, I made a deal with our CEO and my mom that if this podcast gets on the trending page, I will drop out of college and record it and post it on the Beluga account for everyone to see. So if you want to help me get out of college and stay in the trenches 24/7 and be a crypto degenerate, please make sure that you share. Thank you to everyone for watching, and hope to see you guys on the podcast on Thursday.